Hi, everyone. Welcome to Building Foundations with Sherry and
Katie.
today we have a special guest. Katie, would you like to introduce him?
I guess. So this this is one of my favorite lenders, Dan Bernard with New American Funding.
Thank you. Been with New American Funding for 5 years now. Before that, I've been in the industry for about 20 years. So I'm really excited.
Me too. So tell us one fact that maybe they don't know.
Like a
about
fun
you.
fact.
Fun fact, I have 6 kids and 16 grandchildren.
Wow, that's pretty awesome. I'm impressed with that. I think that's great. How's grandparent? I can't wait to be a grandparent. Like, I can't wait to be a grandma.
They're too many.
Let's hope you're not watching this, honey. I promise he didn't say that.
He loves you.
I love them all.
It's a lot.
It's a lot.
That is awesome, though. Very exciting. I thought maybe you were going to say something about like hating fish or something like that.
Oh no, I can't. Yeah, I don't
You're
do
also
fish.
allergic.
I am.
He's allergic to
Oh,
I
that's
am
bad.
allergic to
Okay.
shellfish. I carry EpiPens everywhere.
Oh my gosh. So it's a serious allergy.
Yes.
Okay. Well,
So if you want to take Dan out, take him out to
Seafood. Yeah, it'll be entertaining.
so if you don't get approved by the loan, we're sending you some crab cakes. How's
Yes,
that
there
sound?
you go.
Well, Dan, you're here today to talk to us a little bit about some construction loans and construction loans that your company offers. So what are some, just kind of start us out with what you need.
So, yes, New American Funding does construction loans for primary and second home. We do not do any in on the investment. We do FHA, VA, conventional financing. So on VA financing, we can do 100% financing.
What does
based on-
VA stand for? Just for people
Veterans.
who are, okay, veterans,
For
veterans.
veterans.
Okay.
Yes, so we can do 100% financing on that, whether you own the lot or if you're trying to buy the house and the lot. So if you're trying to buy the house and the lot with the builder at the same time, it's considered a purchase.
Okay.
If you own the lot, then it's considered a refinance. So we use the lot and the value of the lot as an asset for when you purchase. So it's like having, let's say the lot is worth $20,000. It's like having $20,000 in the bank.
And like a 20,000, you can use that towards your down payment. Is that
Correct.
accurate?
That
Okay.
is
Yep.
correct. That is accurate. And that's all figured in. It's a process, but we figure in with all the calculations on the value of the lot and those things. So FHA is the same as a standard FHA. It's 96.5%. Same concept, whether you own the lot or you're buying it. FHA has loan limits, so we have to be careful with those that we're not exceeding FHA guideline loan limits. And then conventional is the same as anything else. Value of the lot, we can do up to 5% down is our max on that.
Quick question. So I know conventional has loan limits as well. So do you get into new construction jumbo loans?
No. So we have to always be careful with that, but you can technically, in a sense, get a house that's $900,000 if your lot value is $400,000. So that's being used
Okay.
as collateral. So the cost of the construction is $500,000. Your loan is going to be $500,000.
Okay.
So
that
you're
one,
now
yeah.
within conforming guideline limits.
Okay, very good. So do you guys do draws? Can you explain
do.
a little bit?
Yes.
About
there's
how that
6
works?
draws. There are 6 draws through the process. The first draw is at about 50 to 60,000, depending, and that is just for lot clearing, preparation, and those things. So when you do and you close on the loan, let's say you have a $400,000 loan. When you close on that, they're going to do the initial draw. So the initial draw, let's say, is 50,000. You're going to be paying your payments on that 50,000. Once that's done, and we've gotten that confirmed that that's done, and they go to the builder comes for the second draw, and let's say that second draw is another 50,000. From that point forward, you're paying your payments based off of $100,000.
Now, does that include a principal payment and interest, or is it just an
Interest.
interest only
It
payment?
is interest only.
Okay, that makes
Correct.
sense.
So at some point through that process, you can modify a lock. On construction loans, you qualify off of an 8% rate. You don't lock it, it's a floating, and that's
Okay.
what you qualify off of, and that's what you're paying, unless you choose to lock at that time. Most people, we tell them, like, wait till we're getting close to the end, because the rates can be better, different things of that nature, and you're getting closer to the end where it modifies into at what's called an end loan or your final loan, which is now becoming a 30-year fixed loan.
Okay, Katie, that's interesting because all three lenders that we talked to, their rates were a little bit different. You had, with the way they work. So I think that one piece of great advice to our buyers would be to make sure that they're shopping around and especially asking about that rate, because I think a lot of people just get into a rate and assume, hey, it's the rate and that's what it's going to be across the board.
Exactly, and
So
it's not. So like I said, we float that rate. That's your qualifying rate, because at any point in the time, it takes usually from the time you get your permits to end of construction is about 12 months. So a lot of times we'll start the loan before the builder has their permits. We will not close until they actually have permits, because they only have 12 months to complete construction.
okay, so yeah, that is different.
We may start the loan, but we won't close it for a couple months because getting permits can take 2, 3, 4 months. So we kind of want to wait till we get to the point where the permits have been issued. Then we can close the loan because of their time
Which is
frame.
really good, because a lot of builders will tell you the slowest process is the permit part.
Well,
for
and
them.
that's exactly I was in the process of building. We were at the last step of our permitting. We got hit with a wetland type thing.
Yep.
So we already had our loan. We already had our loan closed. We paid interest on our loan because we had to refi the lot because we used that for a down payment. And then we still haven't been able to build for a year and a half. So we had to redo the entire loan. So,
Exactly.
I think is a brilliant idea.
Yeah, so I can get them basically pre-qualified, get it through underwriting, get their income, their credit, all those items done before closing, and wait for the builder to receive the permit. And once the builder receives the permit, then we can close.
That's
Because
a really
then
great,
now is really when that loan really starts.
Right, absolutely. So, I'm
I
sorry.
was just say
Kate,
one
go ahead.
other thing with New American Funding, they are their own lender. Is that correct?
We are a
didn't talk
direct
about
lender.
that.
We hold 98% of our loans. We do our own servicing, so they stick and stay with us.
Oh,
I'm not
okay.
saying that we don't sell them.
So what
but
is
it's
the
very rare.
opposite? So when you say you keep it, wasn't that what most lenders explain the difference?
Most lenders
there
sell
for
their
me?
loans on. So
Okay.
once you close within 1, 2, 3 payments, your loan has gone off, and they sell it to a different servicing.
Okay.
Okay, so like there's Mr. Cooper's out there. There could be just like an actual bank, like a Chase or Wells Fargo, that they get sold to. So we don't sell our servicing at all. We hold it, and they stick with us for 30 years of the loan.
Oh, so
And now
then-
I have a question, because I've had customers use you throughout the years. Your company offers a program with the interest rates, because everyone's question is interest rates. And what if the interest rates change? What do I have to do? Do you offer that with new construction and
So we
resale?
offer that with any loan that we close and hold. We have what's called a 5-year rate guarantee. So once you close your loan, within those first 5 years, if the rates drop enough where it makes sense for you to refinance, we do not charge any of our fees to refinance as long as you refinance with us. Now, we can't control government fees because those are there, and we can't control title fees because there's going to be title fees. That is a third party. But our fees are waived if you stay with us within those 5 years.
That's a great.
That's a
I
great
mean,
thing for any
especially
type
at this
of loan,
time,
Yes.
because it gives you some reinsurance based on, well, the rates are a little higher. We're hoping they drop, so you can get in the house now, and then I mean, what's the cute little quote? Date the rate, marry the house, type of thing.
Yep.
So
Yep.
so
Yes. So
you allow us to upgrade our rates within 5 years. That's
Exactly.
great.
And a lot of times I talk to people and they want to buy down the rate, and I'm like, well, that only makes sense if you need to buy down the rate to qualify.
Okay.
Okay, so not always does it make sense to buy down the rate, because at some point these rates are going to come down, and it will make more sense to save that money. You have to look at your return on investment, what's your month over month, when you're going to get that return back. And so I usually sit down and say, okay, if you pay this much in points, it's going to take you this long to make up that difference. The rates may come down. We may refinance within, let's say, 14, 15 months. It doesn't make sense to pay those upfront fees.
Yeah. Wow. So it sounds like you have a lot of great products, and I'm guessing, so, great things for the client, benefits. So what do you do if you get someone and they don't qualify? Their credit is low or they have some missed payments, or do you have anything for
Yes.
those types of people who
So
are
I work with them.
concerned?
I
Okay.
do work with them. We sit down when I'm an old school loan
Mhm.
officer. I like my people to come and sit in my office and sit down with me. It's a process of where I interview them, they interview me. I learn about them,
Nice.
what their needs are, what their goals are, and then at that point we go through the whole process. If their credit is not where it needs to be, I discuss it with them. I show them what the issues are and how to go about correcting them, fixing them, and give them a time frame of when they can reach back out to me so that we can then move forward.
Perfect.
So I know, like, we do buyer consultations. It sounds like you do kind of the same thing.
Absolutely.
And I know that's really essential. And if you're looking to build, there's different types of builds. So we talked about the new construction and with a lot. Now, what if they didn't own a lot? Do you do lot loans?
We do lot loans, but that is something that is not held in house. I
Okay.
broker it out. A lot of times, I tell them to go to their direct, who they bank with. There's certain
Okay.
banks because they can offer a little bit better rates than what I can
Okay.
offer on a lot loan. Not that I can't do them. It's just not always smart
The
and
best
feasible.
Now,
For
if
them.
I wanted to buy a lot and build at the same time, is there a loan that I can do with that?
Construction loan, yes,
Okay, so
absolutely.
That's all in there.
Yeah.
Yeah, so that's your construction loan, and that's if that would be done like a regular purchase.
Okay.
Okay.
And then you said that you like to sit down, you're old school, but I know that we have a lot of out-of-state buyers. Are you willing to do it via Zoom and phone call if they can't
Absolutely.
come in? So you are.
Absolutely.
Okay, perfect. I
do
kind
work
of
with
figured,
people
but
who
I
are
wanted to
out
make
of
sure you
state,
knew
out of
that.
town,
Yeah.
and we do also one of the things that we do, and I was one of the first ones here in the company that just did one with Katie,
Yes.
is a RON closing, which was a fully virtual closing. Didn't have to
Okay.
go to a title company. They sat at home. They signed all their
Oh,
docs
nice.
at home. They were able to do. It's kind of like a Zoom.
Uh-huh.
The title individual comes on and they verify their identity and they just sign everything online at home. They were done in 15, 20 minutes probably.
Yeah.
Yeah,
great.
that doesn't.
Yeah.
Yeah. So as many things that were bad about COVID is that they've created lot of. We
Absolutely.
were made to create a lot of conveniences to help
Convenience,
people as well.
exactly. And the buyers loved it. They said it was great. They said it made it easy for them.
Convenient for working people. and-
Yes.
Yeah.
So they were able
Schedules.
to work their schedule and,
Yeah.
and close when they chose to close. So that was really nice.
So I don't know if you have any other questions right now.
We did I had a random question just recently, and I think it's due to some of the marketing that's out there, but a veteran loan is only for those who worked with a U.S. branch. Is that correct? Because, USAA, the wonderful Gronk and his commercials, it's family, friends can use USAA. Can you clarify just for everyone?
So
what a veteran-
VA loan is only for the veteran or the spouse. And the spouse, if the veteran has passed, can use it as well.
But there's some classifications too that the veteran, it's not like or maybe I'm wrong, and could they have just been in the Army for a year, 2 years,
They
and
have
then
to be honorably discharged.
okay, so it just has to be any type of
And there are requirements. So like even somebody who's a reservist and never was in active duty, they can also use the benefit, but they would have had to have had 6 years of reserve.
Okay, so there are some
Yeah.
types of
Yeah,
classifications.
there's standards
Perfect.
that they have to meet.
I just think there's a lot of mixed media out there with
Different
commercials and different
Well,
information out
and-
there. So for everybody to understand, because it is different. It is a
Well,
little different loan.
And I think we're starting to see so many, like what used to be inclusive, like the USAA, or another one I think of is the Hometown Heroes. There were only certain classifications. Now it's basically as long as your company works in Florida.
So
you can
I
qualify,
have done
right?
many Hometown Heroes. It's a great program here in Florida. Florida has an amazing amount of down payment assistance programs.
Yeah.
They are counties, they are statewide as well. But Hometown Heroes, basically, the company has to have a brick or mortar in the state
In
of
the
Florida,
state, yeah.
with some few exceptions. So, for example, if you work for a Walmart or you work for an Amazon, they understand that their corporate headquarters are not here
Right.
in Florida. So those kinds of exceptions.
So I think we're just seeing a lot of those things that used to be a little more exclusive open up to more people. So I think that's where the confusion kind of comes from.
Yes.
So what have we not asked you that you would think that a buyer might need to know when they're coming or thinking about getting a construction loan?
So as far as a construction loan, the biggest thing is that they have to understand that there are going to be more fees involved when you're doing a construction loan than if you're just buying straight out property, a house, as an end loan. Because we have to monitor this loan for 12 months. Your title company has to do the draws and things of this nature. So there are additional fees that are involved with doing a construction loan that wouldn't be just as a straight end loan.
Very good. So if I'm thinking about building, how much lead time should I have when I start investigating my loan?
I would say at minimum 3 months.
3 months to be able to at least get started in the permitting and all that. Okay.
Exactly.
Okay, perfect. Excellent. Katie, you have anything else?
No, I was just going to say the loan process is usually about a year though total, and you're in touch with them that whole time.
Absolutely. Anytime, I'm always available. Even after people have closed, I've had people reach out to me 6 months, a year, 2 years, 3 years later, and reach out to me, and I'm always available to them.
And you know what? I did just think of a question that I would like to ask you. So I know that when you go into some of the communities or the production builders that we've been kind of talking about, they will have preferred lenders.
Correct.
With a lot of special pricing or that
incentives.
Like, do you suggest that those buyers still rate shop or check with you, or kind of what are your?
Here's the thing that I usually
and I'm
do.
not trying to get you in trouble because I know this is controversial because
it is,
it is. And I think it's important that our buyers know that.
So here's what I normally tell them. I cannot compete with certain builders because they offer rates and incentives that I cannot compete with. What I do tell them is I'm going to keep your file open because if for some reason that preferred lender cannot perform for them, they can then come to me and still get those incentives.
Oh, okay.
So if their preferred lender cannot do the loan, they can come to me and still get those incentives because their preferred lender was not able to.
Oh, okay, perfect. Excellent. Okay, very good. Well, I think that's all we have.
Thank you so much, Dan. I know that I enjoy always working with you. And I have my own loan with New American Funding, so I appreciate it. And if you guys make sure to reach out to us, reach out to Dan.
Or Dan, we'll have all of our contact number on the bottom. You'll be able to do either of that. And Dan, thanks for meeting you for the first time.
Yes,
it was great meeting you. And thank you all for joining Katie and Sherry with Building Foundations. Peace, love, and real estate.
There you go. That's Sherry's corny thing at the end.
That's our gift.
On VA, it is 100%.
Can I start over, and just look at the camera so you're talking to them, not to us?
No.
Wrong answer. Try again.
All right, so you have to ask.
Let me stop laughing.
Because I was trying to go like this to get you to look that way. I looked a couple times and you're still not looking that way.
Talk to people.
I know, that makes sense.
There's
Just remember, they're the people out there.
That guy behind the camera.
Yeah. Okay, we're ready.